Hello and welcome. You're with us here on Business Today. I'm Aamir. Here are the headlines tonight. Bulls back on the Laal Street as indices hit 4-month high on strong global cues. Sensex jumps over 500 points, Nifty above 17,600. IT and financial stocks lead the charge. All eyes on inflation numbers tomorrow. Retail inflation seen falling to 6.7% in July as food price pressure eases, but still far from the RBI's upper tolerance limit for a 7th consecutive month. Don't see crude oil fall below $60 a barrel. That's the view coming in from Shaukat Saha, S&P Global Commodity Insights. We'll get you that exclusive conversation later on the show. Rupee ends weaker on persistent dollar buying by banks. Forex traders believe that the rupee is likely to trade on a mixed note in the near term. With 10 times faster connectivity, real-time downloads in minutes, the next generation of telecom technology, 5G, will bring about a communications revolution. The era of 5G is here in India. With the mega 5G spectrum auction ending, are you now wondering by when you'll be able to avail the service? My colleague Sakshi Batra here with all the details.
Well, India is at the cusp of a 5G revolution. The spectrum auctions for 5G are done and dusted. The government is in the process of now approval and allocation of spectrum to telecom companies. And now it's all about how soon can you really get access to 5G. So here's a look at where and how soon can you first expect the 5G rollout to start with. So first of all, 5G will be rolled out in a phased manner and not all at once throughout the country. Telecom Minister Ashwini Vaishnav had earlier indicated that 5G services will be rolled out in at least 25 cities by the end of 2022. So in the first phase, 5G services will be rolled out in 13 cities first, including Ahmedabad, Bengaluru, Chandigarh, Chennai, Delhi, Gandhinagar, Gurugram, Hyderabad, Jamnagar, Kolkata, Lucknow, Mumbai and Pune. Major telecom operators like Reliance Jio and Airtel and also Vodafone are all geared up to roll out their 5G services in the country too. In fact, Reliance Jio was the highest bidder for the spectrum and bid for almost half of the entire spectrum which was on sale, followed by Airtel. So Bharti Airtel on the one hand will start deploying the 5G network in India by the end of this month, that's August. On the other hand, Reliance Jio is expected to launch its 5G network on the 75th Independence Day, that's August 15. Airtel has set in motion a detailed 5G network rollout plan for 5,000 towns to achieve a pan-India rollout by March 2024. Whereas Jio has actually finished planning its 5G coverage in the top 1,000 cities across the country, and 22 Indian cities will receive the Jio 5G network first. The cities that Airtel will begin the launch with are those where it has already begun testing for 5G networks like Delhi and Hyderabad. However, for the initial deployment, Jio has actually chosen 9 cities, including Mumbai, Navi Mumbai, Jamnagar, Hyderabad and Lucknow, among others. Now, but the question is that is your mobile handset 5G ready to receive the signals? While many of your existing phones may already be compatible, for those who do not have the 5G phones which are compatible as of yet, there is no need to worry because there are budget-friendly options and high-end smartphones that you can actually look at exploring. Among the budget-friendly options, you have a range of options to choose from, including the Moto G51, the Samsung Galaxy M13, the Redmi Note 10T, Realme Narzo 30, Poco M4 Pro 5G, and all of these are in the range of 12 to 15,000. Among the high-end phones, you have Apple iPhone 13 Pro Max, you have Samsung Galaxy S22 Ultra and OnePlus 10 Pro 5G, all in the range of 70,000 rupees to 1,30,000 rupees. But please don't worry if you just bought your new 4G phone and start to think that what will happen to your phone. So your current 4G phone will continue to work very well on the existing network because also it will take time for the entire 5G rollout to happen pan-India, at least 1.5 years as per experts. Now, as far as the prices are concerned, the 5G plans will be initially put in lines or the similar lines as 4G plans as well to, look at quick adoption by the existing players as well. But later on, you could actually look at some premiumization over the 4G existing plans right now.
All right, Sakshi, thank you so much for joining us with that. Retail inflation likely to ease in July due to a fall in food and fuel prices, but it will continue to stay well above the RBI's upper tolerance limit for a 7th consecutive month. Will the common man get some relief from surging prices in the days to come? Watch our special report.
Amid the gloom and doom of soaring inflation, some good news for the Aam Aadmi. Since the start of the year, consumers have been bearing the brunt of the skyrocketing prices. But according to various polls, India's galloping retail inflation will likely slow down to 6.7% in July. This on the back of drop in food prices. Prices of certain key items have seen a sequential fall. Tomato prices have seen a massive 24.2% drop in July. Edible oils and pulses also saw a significant drop. However, prices of potato and onion have shot up. Cost of potatoes and onions surged about 6% in July, while gram, moong and masoor dal prices cooled off. It is tur and urad dal which now costs more.
Since the last MPC meeting, however, there has been some let-up in global commodity prices, particularly in the prices of industrial metals, and also some softening in global food prices.
Since Russia's invasion of Ukraine, inflation across the globe has surged to multi-decade high. Even in India, retail inflation has remained defiant and above RBI's tolerance band. RBI has used repo rate, its Brahmastra, to tame inflation, hiking interest rates by 140 basis points this year. RBI believes inflation has peaked and will moderate now.
Against the prevailing adverse global environment, the MPC noted that domestic economic activity is resilient and progressing broadly along the lines of the June resolution of the MPC. Consumer price inflation has eased from its surge in April, but remains uncomfortably high.
All eyes are now on CPI and IIP numbers which come tomorrow evening. Will India be able to win the fight against inflation monster? Bureau Report, Business Today Television.
Bulls are back in the driver's seat on Dalal Street, with markets closing at a 4-month high. The fall in US inflation, better earnings growth in June, and a consistent buying by FIIs all leading to the rally. Sensex was up more than 500 points today, and the Nifty also up at about 17,659 at close. The broader market participated as well. Financial stocks supporting the headline indices: Axis, IndusInd Bank, Bajaj Finance, HDFC, Tech Mahindra are some of the top Nifty gainers. Tata Consumer was the top Nifty loser after inline earnings. Apollo Hospital slipped 2% ahead of results. ITC, NTPC and HUL some of the other blue chip laggards in trade. But it was ICICI Bank which added a feather in its cap. ICICI joined the elite club of 6 lakh crore market cap, with shares hitting a record high. The lender became the 7th Indian stock to hit such a milestone. Time for a Business Today TV exclusive. Saugata Saha, President S&P Global Commodity, in an exclusive conversation with Sakshi Batra, sharing insights on where he believes crude oil prices are headed from here and whether a recession is indeed on track in 2023.
Last year we were talking about a commodity boom, a super cycle, but this year so far it's been a roller coaster road. In the last 6 months or so, we've seen metals and all sort of commodities falling from their multi-month highs, and they've been tumbling from their March peak as well. So do you think that boom is now somewhat over?
Sakshi, firstly, I would say that for the commodity markets, we are definitely in very interesting times, and I say interesting because I've kind of run out of using the word unprecedented, because everything that happens for the first time seems unprecedented. But what's going on in the world right now across major commodity classes is the impact of many different opposing forces. And I'll talk about commodities broadly in 2 separate groups. One is energy and one is non-energy, because the implications are quite different.
Right.
Let's start with energy. And energy obviously is a huge commodity class, and it includes everything from crude oil to refined products to natural gas, etc. There are 3 big forces acting on energy markets right now. One is the need for energy transition, and you've heard this term before, and people and public, policymakers, everybody understands that over time there has to be a transition from existing sources of fuel to more renewable and sustainable sources of fuel. The second is around energy security. and especially for countries like India, where a lot of the energy gets imported, there is the need to secure future sources of energy.
Yes.
And then the third is energy affordability.
Yeah.
And obviously for a growing economy and for prosperity, you need cheap sources of energy because that's what fuels transportation, factories, etc. So you will see these three things interplaying each other. And in the backdrop of all this, there are some other factors like geopolitics.
Yes.
And there's also the threat of a recession. And a recession could be quite a dampener on energy prices because recessions typically lead to lower demand for energy and consequently lower prices. So we'll see how these three things play out. Our general sense is that energy prices will be elevated for some time to come, and you will see a lot of volatility, right? Because there's a lot of talk about different things in the markets, price gaps, transition fuels, etc. So you'll see a lot of volatility. So I think people should generally assume that there will be a lot of volatility. Anybody who doesn't like volatility, this is probably not a great place to be.
Okay.
And then shifting gears to the rest of the commodity classes, it's hard to generalize the rest of them. They're very different demand and supply drivers across the board. If you look at agriculture versus precious metals versus ferrous metals versus all of those, generally prices have stayed high. Out there's another factor for the non-energy commodity classes, which is around supply chain disruption. And we expect that our research indicates that that will continue, so we should expect elevated prices.
So for commodities, both energy and for the non-energy, like you segregated, what is the outlook for the rest of the year?
My sense is that on the too lower side, it probably doesn't keep too many people awake. But the high prices of energy, I think there is a silver lining in that, because the sustained high prices of energy will drive or accelerate the move towards energy transition. It will force companies, governments across the world, not just in India, to really think about alternative sources of fuel.
Now, the one space I think I haven't touched upon in detail is the metals, both ferrous and non-ferrous, your outlook on both. I mean, especially on the zinc, aluminium, iron ore and copper front, we have seen that they're at multi-month lows. Is it a time to buy or just stay away? Because we've seen many experts just talking about that perhaps this could be catching a falling knife. Where are you at with that?
Our sense is that there is going to be a fair amount of supply chain bottlenecks, which will cause obviously dislocations in demand and supply, which could lead to elevated prices. But at the same time, Sakshi, if you keep in mind that there is a real chance of a recession. Our economists put in the recent reports that we've published, our economists put the chances somewhere between 40 to 50% of a recession globally, and that becomes a countervailing factor. So if that happens, it takes a lot of the pressure off the demand, and that obviously reduces prices. But it's those two things I think one has to watch very carefully.
But do you think that, as was anticipated, that global central banks were on a very, very aggressive path to rate hikes, is that going to be changing? Are they going to be very less aggressive at this point in time? What is your view? Since inflation right now is the bigger point, and we still have to watch out for further data. But
you bring up a great point actually about the whole inflation piece. I think central banks globally, and in particular the US, they've been very, very aggressive in head-on tackling the inflation threat, and they seem to be more focused on containing inflation right now than being concerned about a recessionary outlook. And if that continues, and it's somewhat hard to predict what a central bank or a collective central bank is going to do, but if that continues, it probably elevates the chances that it'll get things into a recession. But containing inflation seems to be a headline focus area for these. But I would also point out that the number we look at for inflation, call it the 7% in the US or 5% in another market, that is a blended average headline number. And there's a lot behind it. So for instance, if you look at energy price inflation, which is a big part of the energy basket, consumption basket in most countries, and especially in markets where energy prices are not capped at the retail level, that is a serious challenge. And even raising interest rates is probably not going to help lower those energy prices, because the demand supply levers there are very, very different. So we'll see what happens with containing of inflation, but portion of that basket which is related to energy prices will probably stay elevated for a while.
Absolutely. Thank you so much.
Thank you.
Let's take a very quick break on that note. We'll be back with more on the other side.
Make your media plan smarter with India Today Live TV on your connected devices.
Welcome back. After a spate of box office underperformers like Samrat Prithviraj, Shamshera and Jayesh Bhai Jordar, much is riding on the fate of Aamir Khan's starrer Laal Singh Chadha and Akshay Kumar's Raksha Bandhan. Both the films have way too much riding on their shoulders. Hopes of reviving Bollywood coupled with Aamir and Akshay's superstardom. Besides this, the big question is whether both films will be able to weather the boycott Bollywood storm at the box office.
It is Aamir Khan versus Akshay Kumar at the box office. Laal Singh Chadha has finally released today and it clashes with Akshay Kumar's starrer Raksha Bandhan. Both the films are hoping to make the most out of this weekend. Expectations are high that the films will perform well and revive the lull in Bollywood.
अब कुछ लोग विश्वास नहीं करते, पर जिंदगी में चमत्कार होते हैं जी।
Laal Singh Chadha, made on a budget of 180 crore rupees, has released across 3,500 screens in India, which includes Tamil and Telugu markets. The film, which is an official remake of the hit Hollywood film Forrest Gump, opened to mixed reviews. Film critic and trade analyst Taran Adarsh gave the Aamir Khan film a 2-star rating and said that it disappoints on several fronts. Raksha Bandhan, on the other hand, is getting a fair response from the audience and critics alike. The buzz over Raksha Bandhan in the capital city is picking up pace, and currently more than 30% of shows are booked. The film is produced by Z Studios and directed by Anand L. Rai and is made on an approximate budget of over 70 crore rupees. While Bollywood's performance has been dismal, 4 successive super hits from the south, Pushpa, RRR, KGF Chapter 2 and Vikram have grossed more than 3,000 crore rupees worldwide. While Hindi films Gangubai Kathiawadi, The Kashmir Files and Bhool Bhulaiya 2 have together grossed 811 crore rupees worldwide. From January 2020 to April 2022, of the country's 9,759 crore cumulative gross box office collection, the 4 South Indian languages contributed 57.3%. Hindi films managed only 31%. Seven of the top 10 grossers in this span were from the south.
With big budget Bollywood films starring A-listers tanking at the box office, it only seems that the pressure is mounting on other films such as Raksha Bandhan, Laal Singh Chadha, Ranbir Kapoor and Alia Bhatt's Brahmastra and even Shah Rukh Khan's Pathan. With camera person Parmendra Sharma, this is Dipali Patel for Business Today.
India has come a long way since its independence from the British rule 75 years ago, and so have the country's stock markets. While earlier the common man held back from investing, today a deluge of retail investors have flocked to the Lal Street. Let's take a look at the ups and downs, twists and turns. Sakshi takes us through the defining moments that have shaped Indian stock markets.
Well, India has come a long way since its independence, and so have the country's stock markets. On the occasion of 75 years of India's independence, we take a look at 7 defining moments that shaped the Indian stock markets, beginning with the launch of Sensex back in 1986. Now, even though the Bombay Stock Exchange, the oldest exchange in Asia, was formed back in 1875, there used to be hardly any trade back then. It was the launch of Sensex, the index of 30 largest stocks on the Bombay Stock Exchange, that was the first landmark event in independent India. Next, we actually saw 1991 economic reforms that were enacted by the P.V. Narasimha Rao government and also steered by Manmohan Singh as the finance minister in 1991. And that liberalized the Indian economy and opened up the Indian markets to foreign capital. And this landmark reform really led to doubling of the Sensex from levels of 1,000 to nearly 2,000 back then. Enter the 1992 Harshad Mehta scam, a scam of around 4,000 crore rupees that actually shook the Indian stock markets and led to a massive crash. This scandal exposed the loopholes in the Indian banking system, the market regulator and the transaction system of BSE. And soon after that, Indian capital market regulator SEBI introduced a new rule to cover those loopholes as well. The NSE was also incorporated back in 1992. Now, the Reliance Industries IPO in 1977 brought in the equity cult to masses. The company was then known as Reliance Textiles Industries. The IPO changed the way Indians invested in India, as the IPO got oversubscribed 7 times, something that was not seen before that. Then the era of passive investing, or investing via mutual funds and stocks, began in 1963 with the formation of Unit Trust of India, UTI, the initiative of government and RBI. Soon enough, there were also private sector funds that entered the Indian markets, giving Indians a safer way to invest in Indian stock markets. Next, the COVID-19 pandemic, severely disrupting the financial markets and the real economy worldwide. Indian stock markets, Sensex and Nifty, logged their highest losses ever of over 13% intraday in March 2020, post the announcement of the nationwide lockdown. But the markets soon began to also recover. The lockdown led free time for many people. Job losses, salary cuts led to an influx of the first-time investors into stock markets. The new demat accounts also jumped to a record high of over 1 crore in FY21. Not just the individuals, companies turned to stock markets to raise cash. 63 companies raised a record 1.2 trillion rupees via IPOs in 2021. The new age digital companies, Zomato, Paytm, Nykaa, Policy Bazaar and many more made their debut on the stock markets as well. And lastly, India became 5th most valued stock markets in the world in March 2022, beating the UK, Canada and Saudi Arabia. Currently, the US is the world's biggest market, followed by China, Japan and Hong Kong. Also, the year 2022 saw history being created yet again with the launch of India's first ever bullion exchange. The exchange is now expected to facilitate efficient price discovery of gold, ensure standardization, quality assurance, and sourcing integrity, and therefore help bring in more foreign traders into India. Just as many market experts really believe that there is only one way the markets will go, or one direction that the markets will go, and that is up. And there's hoping that when India is celebrating its 75 years of independence, the next 25 years turn out to be great for the Indian investors, and therefore the stock markets can create great wealth for Indian investors too.
Thanks for that, Sakshi. Handing over freebies has sparked a massive political war. The fight over freebies has reached the top court, the Supreme Court calling for a debate on this during elections, saying that it's a fiscal responsibility. India Today's Paulomi Saha caught up with Laal Singh, Union Power Minister, for his take on this entire issue. Listen in.
As far as the central government is concerned, because there's been so much of politicking around the subject, where do you stand on the subject of freebies?
I'll just give you some facts. You see, as far as the freebies are concerned, let me explain to you the overall construct. The overall construct is that when Mr. Kejriwal or any other person announces that I will give free this, free that, he is not the one who is giving it. It's the taxpayer. They don't pay. It's the taxpayer who bears the burden of that freebie. So it's not Mr. Kejriwal giving it. It's the taxpayer of Delhi, number one. Number two, you see, the tax resources or the revenue resources of the government are fixed and finite. So, for example, let us say that Delhi government gets 1,000 crores as tax, non-tax revenues. Now, that's the money which he can spend. Now, there's a choice. Either he can spend it by giving, the freebies to different people that, okay, I'll give free this, free that, free that. Now, and he can spend the entire 1,000 crores on giving free money to other people. Now, to distributing free goods to people. That does not leave any money for investments for the future. So then if he distributes all this money, there will be no money left for construction of roads. There will be no money left for construction or expansion of hospitals, construction or expansion of schools, or putting in place stronger transmission systems for the future, stronger, the more generation systems for the future. There will be no money left for that. So basically, what needs to be placed before the people is that total finances available with the concerned state, how much of that they want to distribute free to which sections. You see, they give freebies to buy votes. It's actually buying votes. And they're buying votes using not your own money, but using the public money, taxpayers' money. So they are trying to buy votes using taxpayers' money.
Whether your laid off staff forgives you after you put up a LinkedIn post crying in guilt is a different discussion, but it surely will make you the talk of town. The CEO in question, Braden Wallake, is the chief executive of an Ohio-based marketing agency called Hypersocial. After he laid off some of his employees, his guilt-ridden post on how much he loves them has gone viral. As expected, it's not gone down swimmingly with everyone, with some calling him out for victimizing himself. He has also since then earned the moniker of the crying CEO. That's where we leave it on the show tonight. Thanks so much for watching.
Is China more equipped than the US in the race of nuclear weapons? Unlike the previous battles in history, China this time will not stop its military campaigns against the US, which is backing Taiwan. In fact, the US had predicted that China would attack Taiwan. Pentagon released a report in November 2021 saying that China could have 700 deliverable nuclear warheads by 2027 and could top 1,000 by 2030. On the contrary, the US has 3,750 nuclear warheads and has no plans to increase this. In 2003, the US had a total of 10,000 nuclear warheads. As it is clear that China is using its military drills on Taiwan The US predicted last year that China is expanding the number of its land, sea, and air military and nuclear platforms. Today, it is using its power against Taiwan through land, water, and air. China is building a nuclear triad like US and Russia. Satellite photographs of new nuclear missile silos in western China are also out. The Chinese Foreign Ministry spokesman Wang Wenbing said, and I quote, "The report released by the US Department of Defense, like previous similar reports, ignores facts and is full of prejudice." He added that Washington was using the report to hype up talk of the China nuclear threat and describe the United States as the world's largest source of nuclear threat. This leaves us with a question. If the US is concerned about its deterrence power, then why is it helping Taiwan against China?